Hi, I'm Justin Hales, CEO and founder of Camplify. Firstly, I'd just like to start with an acknowledgement of elders past, present and emerging on the land of the Awabakal and Warramai people where we gather today. For those of you who are new to Camplify, Camplify is a leading peer-to-peer digital marketplace connecting owners of RVs such as caravans, campervans and motorhomes with hirers ready to embark on their next outdoor adventure, all through our rental marketplace. Today, I will provide you with some details on our business performance over the past 12 months, including focusing on our achievement and growth. Our CFO, Andrea MacDougall, will provide you with financial analysis and run you through our overall financial performance and direction. I will then share our execution against our strategy before providing you with an update on our New Zealand acquisition. Lastly, I will provide you with an outlook for FY23 and our expectations for the next 12 months. Despite COVID-19, international travel reopening and the rise of cost of living, as well as devastating floods in New South Wales and Queensland, I'm extremely pleased to announce that Camplify has achieved another strong year of growth and achieved a GTV of $53.6 million, an increase of 63% on FY21. Camplify's total revenue has grown from $8.4 million in FY21 to over $16.3 million in FY22, representing a growth rate of 93%. These results provide a consistent growth over the past 3 years of 111% CAGR of GTV from FY20 and 138% CAGR of revenue from FY20. Booking numbers continue to grow and build at a consistent level with over 39,000 bookings in FY22. Average booking values continue to climb in FY22, achieving a rate of $1,240 per booking. That's a revenue cut to Camplify of $332 per booking on average. Take rate also climbed to 30.50, including van sales. That's up from 25.73 in FY21. Retained hirers sits at 25%, or 1 in 4 customers rebooking their next Camplify trip with us. We completed FY22 with just under 10,000 RVs in fleet, a growth of over 60% on last year. We're showing strong business drivers with global average bookings growing, booking requests growing, and booking values growing. Looking at segment performance, every market grew with Australia our smallest growth with over 60% growth, and Spain our strongest with over 1,100% growth.
Hi there, I'm Andrea MacDougall, Camplify's CFO, and today I take you through a financial analysis and run you through our overall financial performance and direction. In FY22, Australia remained our core market, with 92% of GTV being billed in the Australian market and 8% across all other markets. This is down from 94.8% in FY21, which shows the overseas markets are catching up to Australia, although it's slowly with our large customer base. Premium member growth in Australia remains steady, with growth of premium members by over 40%. We ended FY22 with over 2,900 premium members. Premium members are a key metric for us in comparison to casual members. Premium members pay a subscription fee and contribute significantly more per van than casual members. We recognised $1.6 million in premium member subscriptions in FY22. Van sales revenue has grown in FY22 to $2.7 million from $0.7 million in FY21, much thanks to the introduction of our summer series campervan and developing partnerships with dealership networks in New South Wales. GP margin has also increased from 7% to 9% in FY22. This is driven by the additional margin we received from the summer series van development. Camplify bears some insurance risk across our owner and hirer products. Across these products, insurance increases have had the greatest impact on cost of goods sold. For FY22, these premiums will be recosted and new pricing has already been outlined and changed for customers as of the 1st of September 2022. This will result in an increase on margin for FY23 as a new baseline has been set for insurance products. Hire related GP margin has improved in FY22, up from 77% in FY21. to 82% in FY22. This aligns with our objectives of continuing to set an appropriate baseline of GP margin while still achieving growth and scale. Operating expenses, marketing and employee benefits have increased. This is in line with the growth rates we have seen and demand from customers. We need to scale up spending in these areas as part of growth and scale. This is in line with our strategic objectives outlined at our IPO. However, moving forward, we expect employee benefits to reduce as a percentage of revenue as more automation and efficiencies occur. Government flood bookings provides a slight change to our normal cash flow position. In a normal booking environment, Camplify receives funds from the hirer as a deposit and a final payment a minimum of 30 days before the commencement of the booking, with owners' funds being paid to the owner at the start and the completion of a booking. For bookings through our temporary accommodation program, the booking is paid on payment terms from the government, and the van owners are in most cases paid in monthly payment schedules prior to Camplify receiving these funds. Therefore, this will have an impact on the net cash flow reported as a result of these bookings. Camplify remains in a strong cash position with no debt and the ability to fund our strategic objectives.
Our business is focused on becoming the leading RV rental platform in the market. We've achieved this outcome in Australia, being a clear market leader. Through our acquisitions in New Zealand, we've also achieved this objective. Spain continues to grow at a velocity, as does the UK. In both markets, we are positioned well towards this outcome. We want to grow our fleet and develop our software platform to deliver better customer outcomes and scale our business through more automation. Both of these outcomes we continue to build upon in FY22. Our clear objective is to be in a position to service a growing customer base without the need to grow our base of operations at the same rate. As a reminder, Camplify still has less than 1% of vehicles in the market listed on our marketplace for rent, and still limited on fleet as our market demand for rentals is very strong. In FY22, Camplify launched a number of new revenue initiatives with a view of providing more products and services to our customers and also growing our take rate. Some of these highlights included launch of the Summer Series, and demand and interest in this has been excellent, and increasing margins has driven improved margin results in van sales. Launch of our Hire app. The app has helped us to improve our hire retention from 20 to 25%. Launch of our managed services. This product is in pilot in New Zealand, and we're expecting to launch this into other markets very soon. It's providing an increased rental utilisation and an increase on hire-related take rate. Temporary accommodation program. TAP has been a huge success in FY22 due to the service contracts awarded to Camplify by the New South Wales Government. We've already billed over $1.6 million in TAP rentals, and demand is continuing to grow, with more regions being added weekly. Marketing for FY22 has ramped up in line with our percentage of revenue generated. Our marketing efficiencies remain strong, with CAC numbers for owners recorded at $258 and hire CAC at $13 per booking. We have driven these customer acquisition costs down from the results of the half year through our network effect and improved marketing efficiencies. During FY22, Camplify acquired MyWay and Share a Camper from CHL. This market is a key strategic market for Camplify, and we are now the dominant player in New Zealand. The market has a higher average booking value and a higher daily rental rate than other markets. While this market has been significantly impacted by COVID border restrictions, recovery is well underway, and booking volumes have been significantly improved since restrictions relaxed. New Zealand is a summer rental market, and we expect to see the greatest impact in the warmer months from October to April. Looking forward for FY23, Camplify will continue to grow, but more importantly, we'll continue to scale. Utilising our technology investment, we will continue to service more customers than ever before and enable our team to service more bookings without the need to grow at the same rate. There are a number of key things highlighted for FY23. Future bookings has increased from June FY21 at 6.95 million to June FY22 at 14.79 million. This is plus temporary accommodation bookings, which gets recognised on a monthly basis. The temporary accommodation program business continues to grow, and demand for this service will be significant over the next 6 months. Demand for our products and services are strong. International border restrictions have not changed this. In fact, our velocity is improving. Needless to say, the future looks bright, and we're looking forward to continuing this strong growth and scalability for FY23. Thank you for your time, and as you know, we're on a mission to make van life accessible to all and appreciate your support in this journey.